Hey, welcome back to Two Stupid Guys Trade Stocks. I'm Dylan.
And I'm Vinny. And our patron saint of this channel, Dr. Michael Burry, put out a tweet that's kind of trying to answer a question that literally is on every trader's mind right now. When can we confirm a breakout of this 200-day moving average and the beginning of a new bull market? We're going to take a look at it, and we're going to look at the historical context.
Wrong button. Talking.
Two Stupid Guys Trade Stocks.
It's been a long day. All right.
Well, this is the tweet. He put it out last night and promptly deleted it because the psychopath that he is, but that's a completely separate topic. But he has an interesting little area circled here. This is back from 2001, kind of the end of 2001, beginning of 2002, where it looks like an interesting kind of pattern emerged here where we were just kind of breaking through that 200-day, but we ultimately just then flushed the whole market. So the real question is he, he said maybe is his exact, the only word he put on this damn tweet here, is he trying to hint at like that's what he thinks might be going on in the market right now? I don't know.
So, important note, that is the 200 moving average that he's talking about. That's the one that I've been talking about forever, right? So what we did, we went back to 2001 to see if it followed the rules, right? So the full rules of this pattern is that if it breaks the 200 moving average, stays above it, and breaks a high, preferably very, very close to the 200 moving average, if the high's super far away, then you're way too late on the bull market. So what we did, we looked at it, we found it. What is this? It is 2002 March 14th. Okay, this is what his thing is on. As you can see right here, let me zoom in a little bit more here. This is pretty cool.
Yeah.
It actually never broke at once. So we break down the 200 moving average. We did not have 2 days sustaining new highs, so we're still alive here in this pattern. Okay, so we're still bear market territory. We go down, not enough momentum. We go back up. Now, this is where I would get incredibly nervous, all right, for my strategy. We break above the 200 moving average. We set a high. So now I'm like, all right, if we break a line of resistance somewhere near, it's over, okay? So this high is, you guys can't see that, it's a bummer, 17.98, okay? 117.98. This one, 117.91. This one, 117.9. Literally 0.08. It never breaks it. This one,
Wow.
117.74. It literally, it didn't break the rule. It never goes above the trend, and then, obviously tanks, right? You remember Tank City back then?
Yeah.
I'm going to go all the way back.
It does spend like a solid 2 weeks or so above the 200 SMA though, and then it ultimately never achieves like the beginning of like a a bull market, say, or like setting that new high.
Yeah, it just never hits it. So we have the same thing. Unfortunately, the next line up. Now let me zoom out for context. This is still quite low. It's not up here. That's quite far away, right? I mean, look, the stock market's the stock market. It could break my little high here of 410, break my dreams, make me cry, make me very depressed, go up here, bounce off, and come back down. That can happen, right?
Okay.
But for my individual strategy, you can see it's still following a pretty standard. That's as scientific as I can make it. So
All right.
yeah, the 200 moving average, this gray line here, we're just caressing it right now. We're just messing with it. All right, we're really just kind of twiddling our thumbs. We put up a high. We did not put up another high, which would make me quite nervous. But this 410 level, the exact number is 410.49. What's this? 410.49.
Okay.
That's the level that's going to make me cry, right?
Is that when you closed your puts? Is that your
That's
rule right now?
that's when I would have to, yeah.
Yeah. All
And
right. So
once again,
1050 and you're out.
what 110.50, I have a stop loss, is what it is, right? Could it go down and I just lose everything? Absolutely. That's how life is, right? And then it's just a great lesson. You know, what are you gonna do? But we're still in it. We had some very odd volume today. This was kind of a low volume day. We put up a doji after decreasing on volume through the 200 moving average. You can interpret that what you would. Still makes me feel good about it. But, you know, everyone has different opinions. Give us a like and subscribe for my account because, man, the theta decay is real. Let's talk
Yeah.
woof. It is
Completely
rough.
understood. Yeah. So I've been watching Figuring Out Money daily. Actually, he puts out a video kind of update on terms of stock market technicals every day. And yeah, he was like, yeah, he's like, I'm not really buying this. Something smells fishy because he was like, the market was up significantly, but the VIX barely moved. This was yesterday he was talking about. I don't know if
Yeah,
his
yeah,
video
yeah.
for today is out yet, but
I
yeah,
mean,
it doesn't feel right.
everyone's looking at this level. There's a reason why I'm following the 200 moving average, so I made those rules for myself. It's because it's a psychological level. You break through it, psychologically, you're going to think people are going to go long. It's going to happen. The other trend line is your backup safety. Some people could, if they have 2 or 3 days in a row higher above the 200 moving average on high volume, be like, all right, screw it, I'm out. And that would be super fair. Yeah. I'm
Yeah.
just hold on for dear life because like I like to live dangerously. All right.
Yeah, I
Yeah.
mean, come back to this channel regularly when you need your hopium and copium for your bear market trades because that's what we're into.
All right, guys. Stay safe.
Get to the next one.